Alright, good morning. Thank you guys so much for tuning into today's live stream. Today is April 17th, 2025. And yeah, it's a splendid day today. It looks amazing outside. Feels great as well. About let's see how much it is outside. What's the temp like? 67 degrees, which is amazing. Yeah, to begin today's live stream, let's take a look at the economic calendar here. So we have unemployment claims, fully fed manufacturing index, building permits, housing starts. Alright, so I mean the only one that I really am looking at here is unemployment claims, and it's actually at 215,000 in comparison to previous 224,000, and the forecasted was 225,000. So this is good. Unemployment isn't good, but because it's like decreasing, it's not bad. Relatively in comparison to during COVID, where it peaked like 6 million. It's a slow gradual decline. It's been constant around like 200, around there. So this isn't too bad. But as of volatility wise, it is going to bring in some sort of volatility into the markets. But yeah, let's see for now. On the technicals, at least. So the daily candle here from yesterday, we had a pretty bearish closure, right? We had a down close candle, and so coming into today, I would like to see us take out the previous day low, but none of the intraday candles. So what I mean by that is like the 4-hour candle, the 6-hour candle, the 8-hour, the 10-hour. All of those time frames weren't suggesting and really supporting the idea of lower prices. So coming into like this morning specifically, I would like to trade using the intraday time frames, 4-hour, 6-hour, etc. And I would like to align myself with those. I would like to align myself with the daily bearish order flow, using, the possible 4-hour, the 6-hour, the 8-hour time frame. But as of right now, I'm not going to force. I'm not going to force a trade with a directional bias. Right? That's not efficient to do. I'm not going to force a trade to happen because I need to be in a trade or anything like that. I'm just going to let prices, do its thing. I'll let the candles close. And yeah, so we close on this 4-hour candle in about 23 minutes or so. So depending on how we close on that 4-hour candle and 8-hour candle, I would then be able to come up with some sort of, I would be able to come up with some sort of bias for the morning. Alright, so yeah, like I said, gonna use the 4-hour time frame, the 8-hour time frame to align myself with, the daily order flow. I do want to see us take out previous day low, but like I said before, I'm gonna wait until we actually have a bearish. I would wait until the intraday time frame aligns itself with the daily time frame or the daily order flow. Let's take a look at some news here. See, Trump lashes out. So Trump wants to lower the interest rates where the federal funds, they are kind of in a sticky situation with rising prices due to tariffs and just, it's when prices are increasing, right? That means inflation is increasing, and to be able to fight against inflation and high prices, the best way that the federal funds could intervene and kind of resolve the situation is by raising interest rates. However, Trump wants to lower interest rates, and it wants to kind of like, I guess, I would say he wants to kind of really revitalize, get people to consume. But the thing is, no one's going to want to consume high prices, right? Tariffs are going to just increase the prices of everyday goods, right? With that 10% tariff across the world, it's just, yeah. This is the one I wanted to take a look at. Is this a video or is this? Oh, yeah, I want to read this one. Okay, so here, Jerome Powell warns a challenging scenario as the Federal Reserve is in a very sticky situation because the central bank could have less flexibility to quickly cushion the economy from the fallout of President Trump's trade war, sending stocks down on Wednesday. Powell said a strong likelihood that consumers would face higher prices and that the economy would see higher employment as a result of tariffs in the short run. So a strong likelihood that, yeah, I mean, tariffs are going to increase prices. Once those prices are increased both on the producers and the consumers, producers are going to have to kind of decide if they want to, cut back on spending, cut some people, just free up some cash. This would create a challenging scenario for the central banks because anything it does with interest rates to address inflationary pressures could worsen unemployment. Yeah, if it raises interest rates, unemployment could rise. And if unemployment rises, that's just one of the key components to a recession. And vice versa, he said it's a difficult place for the central bank to be in terms of what to do. Powell said during a moderated discussion at the Economic Club of Chicago. In some ways, the Fed's problem resembles that of a soccer goalie who must decide whether to dive to the right and focus on inflation, or to the left and address a weaker growth as an opponent takes a penalty kick. We'll make what would no doubt be a very difficult judgment, Powell said. When determining how to set interest rates in such a scenario, the Fed would weigh how far inflation is from its 2% target, how weak the labor market becomes, and how long it takes for both of those variables to improve. Unemployment is actually declining here, so the Feds might see this like, hey, unemployment's fine. We could end up raising. We have the affordability to raise interest rates in order to kind of destimulate inflation, kind of just lessen it by a little bit. Who knows? Powell also hinted that the central bank could give priority to its inflation goals over its labor market mandate if the two were in conflict. So here he's actually saying that he could possibly focus on inflation, meaning raising the interest rates. The Fed would attempt to balance the two goals, keeping in mind that without price stability, we cannot achieve the long periods of strong labor conditions that benefit all Americans. So he wants to focus on price stability, kind of getting the prices of things under control. The Fed's focus, he said, will be to ensure that any one-time increases in prices from tariffs don't fuel more persistent price increases. So he doesn't want tariffs to continually increase prices. It should just be a one-time thing. In 2022, the Fed raised interest rates at the fastest pace in 40 years to prevent a sharp rise in prices, which officials initially misdiagnosed as transitory, are likely to fade on its own. From sustaining high inflation, many economists believe the central bank was on track to succeed by the end of last year in bringing inflation down without a recession. Bringing down inflation by raising interest rates, and raising interest rates could possibly cause a recession. Many economists believe, inflation had fallen to 2.5% earlier this year from a peak of more than 7% 3 years ago. Powell suggested that the post-pandemic experience was top of mind for policymakers and who are now confronting new shocks to global supply chains from tariffs. Powell pointed to car makers and their assembly chains as one example of economic activity that could be disrupted significantly by tariffs. You would worry that process would take years. And that the inflationary process might be extended. Powell said, when you think about supply disruptions, that is the kind of thing that can take time to resolve, and it can lead what would have been a one-time inflation shock to be extended, perhaps persistent. Getting manufacturing in the United States isn't going to happen overnight, right? That's kind of like the whole goal that Trump has, is to bring manufacturing back to the United States, and that we are self-reliant. However, companies need to spend a decent amount of money to even do that, to bring back the jobs to the United States, to create back factories. It costs a lot of money, right? And another case to be made is labor costs. How much is it going to cost for companies to hire people from the United States compared to maybe in China, right? It's cheaper cost there in China, and it's more expensive here. And we'll see. The upshot is that the Fed is likely to hold back from lowering interest rates, which can stimulate demand by spurring purchases of interest rate sensitive goods until it sees an increase in joblessness. joblessness. Powell nodded to a fluid economic outlook that has been whipped around by unpredictable trade policy announcements, as that great Chicagoan Ferris Bueller once noted. Life moves pretty fast, Powell said. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. He also said he didn't see a need for the Fed to intervene in markets that were gripped with volatility last week. Markets are functioning conditional on being in such a challenging situation, he said. Most of Powell's colleagues have outlined a similar view about how the Fed should wait until the potential trade-offs materialize before acting. I would rather be slow and move in the right direction than move quickly in the wrong direction. That's good. I mean, if I were them, I would probably do the same thing too. Because, I mean, maybe, who knows? Maybe Trump backs down and just gets rid of tariffs overnight. Who knows? Fed Governor Christopher Waller offered a different view in a talk on Monday. He said he judged the effects of tariffs on prices would likely be temporary because the ensuing economic slowdown would make it harder for the economy to sustain high inflation. In a scenario where large tariffs increases remain in place, I would expect to if the economy goes into recession, the Fed wouldn't have to worry as much about inflation, so long as consumers and businesses' expectations of future inflation remain stable. The main issue will still be, can they stay with a straight face that inflation is coming down to 2%, said Bullard, who is now Dean of Purdue University's Business School. To cut rates, they need some help from the inflation data. They need to be able to say that based on some type of calculation, inflation's still going down. All right. Back to the technicals. Sorry about for the long, I really like reading these types of things, but yeah. So, what is that? I kind of want to read that next. Okay, so technicals here. So from this swing high to this swing low. From this swing low into this swing high, there is a dealing range, and within that dealing range, there is premium and discount. As you guys may have saw earlier in the live stream, you guys saw how I was drawing that up. I was basically seeing if prices could trade back down into this price level here, this discount level. So buyers, they're always going to want to buy in discount. And discount is 50%, is the lower portion of the dealing range, the lower 50% portion. And notice how prices trades into this 50% and kind of gets a move higher based on the way that we're creating this hourly wick here. Like I said before, still gonna wait until we close on the 4-hour candle, and the still gonna wait until the 4-hour candle and the 8-hour candle closes for a morning objective. For right now, just watching, nothing, not really doing any much here. Not gonna force anything. Not gonna do anything too gnarly. Just simply an observer of how prices, of basically about what prices wants to do. And yeah, we'll see you here about 7 minutes or so. And how we close. Give me 1 second. I'll be right back. I'm gonna go get something to kind of like munch on. back. Got myself some corn. Gonna be chewing on this for a little while here. See if we traded back into the 50% of this range. We did. About this one, not as yet. Nimble. Let's get into one chess game before the match, huh? Or not the match, but before the 10 o'clock open. it's about to be 10. 1 second. There we go. Not confident in the way that we close here on the 15-minute. I wouldn't say so at all. Not really suggesting the amount of movement that I want to see. Well, not the movement, but I guess like not the type of closure I want to see here on this candle. Very interesting. Might gotta resign, right? I'm pretty sure I'm losing here. Yeah. It's okay. All good. Yeah, with the way that we close, 4-hour candle, 8-hour 4-hour candle, 8-hour candle. I'm not gonna force a bias. The last thing I want to do is force something onto the market. Yeah, with the way that we close on the 8-hour, 4-hour, confident to say that I'm not looking for anything. The way that we close on those time frames, can't really do anything with them, and I can't utilize the lower time frames as well, right? They don't really show as much clarity as well. So what I actually want to do now is I'll go over some of the pros and cons here with you guys and just see some things that I can work on coming to this week. All right. So for the pros and cons here coming into this week, you know, if you guys were watching the live stream from yesterday, you guys would have seen the trade recap that I went over, and it aligns with the very first thing that I do want to mention here is taking consistent trades. Being able to continually take the same structure, the same components, right? The same concepts every single trade that I take over and over and over again. Where every single trade has this common characteristic: a higher time frame objective, a model, and an entry pattern. Being able to identify those three components before and after every single trade keeps me consistent. It keeps me aligned with the strategy that I have implemented for myself, I have created, and being able to actually follow those, those rules. Second, paying close attention to SMT, understanding where there's been manipulation so that you are not a part of it. Lack of SMT suggests the idea of possible continuation, and a presence of SMT, if there has been manipulation, you do not want to be part of it, because it could be a complete reversal, a possible reversal from the initial direction that you're thinking of, or that you're favoring. And what to do when there's SMT that occurs during a trade? Well, you do want to move the stops to break even. That's the most valid option. And don't be scared to get stopped out. It's normal. Moving your stop loss to break even really prevents you from taking any unnecessary losses that you might take during manipulation. And third, just understanding the importance of a fair value gap. Like I stated with you guys in the first point, higher time frame objective, model, entry pattern. My entry pattern always going to be a fair value gap. It's a sign of displacement. It signifies the idea that there's been some sort of willingness to continue in that direction, right? And some things that I can work on coming into this week. When considering to invest long term at all, I should always take a look at the company's financials and be very diligent in doing my research, right? Sorry about that. So I got an email, but So do my research, and just practicing due diligence. And my improvements, they're the same. They're like the same concepts here. Taking those consistent trades, practicing consistency. How am I going to be consistent? Requiring a higher time frame objective, requiring a model and an entry pattern for every single one of my trades that I take. And second, just reviewing the higher time frame concepts, really understanding equilibrium model, expansion model, and how they work, right? And that basically sums up everything that I do want to go over with you guys here for the morning. It looks like we are getting some sort of expansion lower here. We'll see. I wouldn't say expansion, but we are getting this move lower. That might turn out to be us taking out the 4-hour low, but we'll see. I need to see how we close first before really saying anything. But the one thing that I was looking at is this 30-minute candle. With the way that we closed below this green line, so notice how the red line is below the green line. That means that we closed below the green line, right? And because we closed below the green line, you would treat this inefficiency as a breakaway gap, meaning you don't want to see prices trade up into this inefficiency for the next 30 minutes, which is reasonable, right? I could provide us with a bearish buy. That's enough information to give us a bearish directional bias for the next 30 minutes. But even with that, it's just looking based off of this 30-minute candle and the way that we closed here in the 15-minute time frame. It's kind of like you don't know which side to pick, you know. But we'll see. If we can get a bearish, 15-minute closure here, then perhaps we could take a trade somewhere. But like right now, nothing for me to really force. Nothing that really it's going to really get me involved here. This would have been an entry pattern here. Now taking a look at this, but this is at 9:30, which isn't really somewhere that I do trade. So we created a bearish 30-minute candle. 15-minute time frame aligns with that. Let's take a look at some fib retracements. It's funny. Look at that. I mean, I do know that it's at 9:30, and I don't trade 9:30, but like this 15-minute candle suggests bearish prices. We trade up into a 1-minute fair value gap. We respect it. We expand towards the 15-minute low, expand towards the 30-minute low, continue to expand lower. We hit this -4 standard deviation, and we have a reversal. That's so interesting to me. I find that really very, very interesting for the way that we reacted to things there. Yeah, I mean, that's very standard trade. Very easy trade to take right there. It's at 9:30, so I'm not gonna force anything. Alright, about 3 minutes left until the closure here on the 15-minute time frame. And I really don't have a bias. I mean, I don't want to force anything here, so I'm just gonna call it a day. I think there's nothing else for me to really force coming into this morning. We might get perhaps a setup later on once we get a closure somewhere, on the 6-hour candle or their 10-hour candle. But as of right now, that's going to be all for the live stream. Thank you guys so much for tuning in, and until next time.